Thank you for checking out Options Premium Daily. I'm your host, John, and I appreciate you coming in on a Sunday here with me. I hope everyone's been having a good weekend so far. And this is where the prep is made. This is how traders get ready and prepped for the week, and that's how you have solid plans when things may or may not go your way. So that's why we're here. Today I'm going to give a really quick coverage of NIO since we have earnings coming up. It's on the 17th, which I believe is Tuesday, and keep an eye out for that. The call is at 7 p.m. Eastern Standard Time, so usually they'll report earnings sometimes right before or a little bit sooner. So that is Tuesday's the big day, and then Wednesday we'll see, I guess, all the reactions and after hours, before hours type trading. So I'll cover that, but always we want to kind of look at the important things like the general market, maybe get a feel for that. So first let's look at SPY, and this is the S&P 500 ETF. You'll see we've kind of gone above our prior channel that was providing some support. Now we have support level, and what I find interesting actually is as we come here, you'll note the volume kind of lower. We have really high volume bars on the downside. And if you look at my current horizontal line with my mouse here, I'm at the, what is this? About 358, 359 level. So that is being respected, actually. I did expect us on Friday to either get well above that with some conviction and some volume, or we end up closing below that. So that is a very notable level. We are now officially at the top of the range near what appears to be some resistance. So keep an eye on that. Could be very important. And let's look at the Qs really quick. NASDAQ, I think you're seeing some similar action. Yeah, we're in the middle of a trading range, and same idea here. You'll notice a little bit lower highs in a way, and we're sort of trending down. You could even draw a trend line here if you wanted. And we are wedging up too. So with this lower, lighter volume that we ended up closing out on Friday, we're sort of mid-range, maybe a little to the upper side of it, but still about a mid-range. The market doesn't really know what to do, what to expect. To give you some idea, there's still some unknowns out there with the current virus going around, with political and news cycles right now. We're still about as messy as we've kind of been this year, I guess, if you could give any consolation. So next, let's check the VIX here. So VIX volatility has gotten lower. In the past, I thought we'd maybe stay above that 25 level. We are under it. Great. But you'll know there's a massive support that we're approaching here at 20. And this is key because you'll see this level here. Actually, let me put down a price level so you can see that drawing, okay? That'll make it a little easier to see. And as I go here it's around 20 and change, just keep an eye on it. Okay, so I'm going to right click now and extend this to the left also, and take a peek at that. So on the left side of this, we're being respected. We've been respected during the summer months. We gapped above this, and now we have, this was a past resistance in early this year, and now we're still respecting it. We've kind of tried to test it a couple times, bounced, test, big bounce, test, another one, and then we're testing again. So this does get important. Usually when the VIX spikes, that is tied to downward pressure and momentum. So with that being said, let's check out NIO. Now, NIO, this has been the maybe darling stock for people, who knows. I can tell you that Wall Street Bets is going just caca insano. It's wild the amount of press it's getting, exposure, who knows. But I can tell you, full disclosure, I did actually own 200 shares at about, it was 1820, I think, 1821. So that was great, and had some covered calls going against it, and those worked out my way. But then when it started getting a little volatile, I just decided to hold, see where it goes. And then next thing you know, we doubled. So that was great. But part of that disclosure, I will tell you, is on Friday, I actually sold a good portion of my position. I'm only holding 25 shares, And honestly, those are like little lottery tickets, I guess you could say. If this decides to soar to the moon and back, then at least I'm holding on to a little bit. So that's where I'm at. That gives you some of my bias. But let's look at this from a different standpoint. Okay, so if you just kind of look at the past movement for the year, you'll see just to the naked eye, we consolidate, leg up, consolidate, leg up, consolidate again, leg up. And we're in that same boat here. Basically, I mean, it's every month it seems like it does this. Now we've legged up. We need to basically consolidate for this to be healthy. We need a lot of things to catch up. The thing that is nice is as we're going up, the volume is increasing. So that does add a bit of conviction here, which is great. But we need things to catch up, like the moving averages. We need people to start sort of soaking in the information. And there's a couple negatives here, especially in Friday's action, meaning we jumped really high, brand new all-time fresh highs, and then we decided that was not great, so we decided to close. If you're a candlestick trader, we're basically near the bottom third of the doji, the trade, whatever you want to call it, this big moon, essentially. And that is usually a more bearish signal. The volume's up too, which is interesting. So usually when you have really high volume, we kind of like to close higher. Higher than the open for sure. And let's do another one. The biggest thing I like and dislike is that this range is huge. We go from 54 to what, 40, and we close near the lower end of that range. So keep that in mind. Another big thing, I'm not usually big on news and technical. I'm only usually big on technicals. I don't really care much about the other stuff like fundamentals and news. But a notable analyst from Citron, Andrew Left, he's a notable kind of short seller typically. He's a net short seller. I guess he's now turned a little bearish on NIO in terms of the price has just gotten a little out of hand and gone exponential. And, can you really disagree with that? Probably not, but I don't think you should always take that into account. I generally don't agree with his analysis of Tesla. So in this way, though, he did get the call from NIO right when they decided to buy it for the fund. And I don't know, they got a couple %,000% out of it, it looks like. So that's great. But let's look at another thing that's important here. As I go to drawing tools over, let's get out of price level, but let's look at maybe the Fibonacci levels. So I'm going to take this previous high, 54.2, boom. And I don't know, let's just take it down to this low here. And you'll see a few notable things. Let me lock that in, boom. So the biggest thing I'm seeing is that, if we were just playing in terms of probabilities, let me go weekly really fast too, just for fun. Ooh, even bigger. So excuse me there. But if I go, let me just go back to drawings. I'll go to the daily. It's a little more clear to see. So back here, daily, the retracements do seem notable. You'll actually see that this is a good and bad sign. The bad is that we're very extended right now. So if you were to try and say, John, you have to pick something, I would tell you I'm not interested in buying at the moment. Okay, that's just me. That's my account. That's my risk tolerance. But if I was looking lower, like if this stock drops, say in the 28s, the 22s, these are levels that actually do seem to provide some support. That 50% retracement puts us at about $28, $29. I find a very interesting one here at the 38.2, and it's actually tied to this gap. So I would literally not be surprised if we came near this. It's also near the 50-day moving average, but again, you never know. I mean, sometimes things work out, sometimes they don't. Usually if you play it in probabilities instead of set in stones, that is kind of helpful because then you can actually have a plan for all choices. Now, the other thing too that seems interesting is this does seem a ripe time for NIO for dilution, so maybe they raise more capital. Now, I'm usually not opposed to that as long as from a company health standpoint, they actually have an efficient use for that capital. But if the market, if the street does not see that and they don't see a clear path as to why, it will drop. Not only with the dilution, but the sentiment will change. So keep that in mind. That's another potential risk, but not necessarily something you should, I guess, take it to the bank on. The next key thing I will say is we just got to let stuff play out. So I definitely expect the implied volatility to pick up a lot. So options premium will probably go much higher on this stock in the next 2 days. So Monday or even Tuesday at close, we'll probably see the premium and volatility get to one of the highest levels, maybe of the year, honestly, because it's such a hot stock right now. It's really, volume's picked up significantly. All eyes are on NIO at the moment. So that might actually play some very good risk reward trades. So I'll give an update in the next maybe day or two, and we'll actually take a peek at this in live on NIO, and maybe if there's some trades we can take for earnings. But nonetheless, I appreciate you. Thank you for stopping by and watching Options Premium Daily. Make sure you subscribe with the notification bell, because we will have that NIO live stream coming up soon, where you'll be able to see what makes sense, what's the best trade to take, and how we plan to play it. So stay on top of our trades and videos, hit that like, go ahead and subscribe. I really appreciate you stopping by, and I'll see you on the next one. Bye-bye.